Okay, good afternoon and welcome back everyone to our options education webinar series. Today we're going to be talking about how to find your directional edge when it comes to stocks and options trading. I want to start off by just saying apologies for the tech issues that we had. I know last week we sent an email saying you can now register for all of February's webinars in one shot. That got screwed up a little bit, so we have fixed things up. So now you can actually register for the whole year. So you don't have to register every single week anymore. You just simply have to register once and you're good for the rest of the year. And we'll send you reminders every single week to let you know what the new recordings will go in, the new topics, what they're going to be. So today we're going to be talking about finding a directional edge. And this is really important regardless of what asset class you trade, whether you trade stocks, whether you trade options or any other market. The basis of trading really is understanding where you feel the directions is headed. So how do we actually go about doing that? That's what we're going to explore here today. We're going to go over two key indicators that you have access to here at OptionsPlay that's going to be able to help you gain that directional view. I will go through why we want to use these two indicators, what the benefit of each one is, and how you can use them in conjunction with each other to gain that directional edge. And then what we want to do is we want to show you some examples. That's really where I think you're going to be able to learn what we're going to be showing here today is by going through real examples, as many examples as possible, so that you can see how our watch list and our platform is designed to make your process of finding an objective directional view on any stock or ETF as easy and as quick as possible. So I'll do about 15-20 minutes on the slides showing you the concept of these two indicators, why you should use them. But I will spend most of my time going through as many examples as possible. And we'll do something a little bit fun at the end. We're going to do a lightning round where I'll ask you guys to submit symbols and I will post them into OptionsPlay and show you how quickly it is, how quickly you can gain that directional view by using our platform. So the goal here for today is so that after we finish this 45-minute webinar, you're going to be confident that you can utilize our platform to gain a directional and reliable directional view on any stock that you type in. So that's what I'm hoping to achieve here with this webinar today. So let's go ahead and get started. Before we jump into it, I just have a few housekeeping items. For those of you that are brand new to OptionsPlay, welcome. You can sign up for a free trial for the thing that we're going to show you here today at OptionsPlay.com, 30-day free trial. With included in that, you're going to get weekly options education webinars like the one you're on right now, as well as daily trading ideas. For those of you that are OptionsPlay subscribers, welcome back. And I do want to point out that for those of you that want to learn more about options, if there's any terminology with respect to options that you're unfamiliar with, I highly recommend you to take a look at the Options Industry Council, a really great resource that's free of charge to everyone to understand more about options. And when I reference anything in previously recorded webinars, I will send out these slides at the end once we're finished with the recording, so that if you want to view some of our previously recorded webinars, there is a link directly to that so that you can view any of the other topics. So whether you're brand new or experienced options trader, we have a wealth of knowledge here at on our YouTube channel to show you how to utilize our platform for various trading. So with that, I want to jump into a few different things here today, but the first thing I want to address is paralysis by analysis. This is a concept that I think most of you will probably connect with, where you may feel that there's simply too much information out there, an overwhelming amount of information where it's actually less helpful than anything else. So we're going to talk a little bit about how to navigate that, and why the two indicators that we want to look at when trying to gain that directional view is looking at trend and relative strength. So I want to define what trend and relative strength is, but most importantly, what I want to show you is how you can utilize these two indicators alone to really find your directional edge. That's the goal here today. And then what we'll do is we'll go through some bearish and bullish examples so that we can help drive home the point as to why these two indicators in conjunction with each other really allow you to gain that directional edge. And then what we'll do is at the end, we'll do live analysis with OptionsPlay. I will have some symbols that I already have pre-scanned that, to show you as an example, but we'll also do a lightning round so that you guys can submit symbols and I can show you how easy it is to use OptionsPlay to gain that directional view. So For those of you that don't know who I am, my name is Tony Zhang. I'm the chief strategist here at OptionsPlay. I spent about the last 12 years of my life as a market strategist, the first 7 years or so in the FX and futures market, providing market color for both retail and institutional clients. And then we co-founded OptionsPlay in 2013, and I've been spending my time effectively building innovative options trading tools that we started out as just using for ourselves as traders, because we realized the work of a trader is really a lot of repetitive steps day in and day out. So what we want to show you is the automation that we've created for ourselves and subsequently allowed you guys to use through OptionsPlay. So those are some of the things that I want to show you guys here today. Like I said, this webinar is recorded, so for those of you that are brand new or want to take some time to go through all the content, I will send out both the recording with the slides right after we finish here today. So before we go ahead and get started, I do want to ask everyone a quick question. So I have a quick poll up here. Do you find determining a stock's direction a bit overwhelming? I just want to get a sense for how you guys feel when it comes to trying to gain that directional view on a stock. Okay, so the results are actually quite mixed. I don't think that any particular answer is leading right now. About 45% of you say that you are fairly confident in your ability to gain a directional view, which is great. Hopefully, this helps solidify two indicators that will reinforce that. For the roughly a third of you that say you're not sure what to rely on, or I'm sorry, you're not sure what to rely on, yeah. I really hope that this will help illuminate two indicators that will really help you gain more reliability in your ability to look at the market direction. And for those of you that you're saying you're not sure, well, hopefully this will help cement one of these two for you at the end of this webinar today. So I want to start off by talking about this concept of information and data overload. I think many of you can connect with this concept that we simply have access to too much information sometimes, where the amount of information that we have is so overwhelming that we really don't know where to look. What we see is that we have too many data sources or indicators where actually it ends up providing the exact opposite result of what we're looking for. And many times when you're looking at lots of different indicators, you actually get more conflicting signals than signals that confirm your view. And what we call this is paralysis by analysis, where we just have too many things to look at that we become overwhelmed by it. So how do we actually simplify this? How do we actually filter out the noise and get to the information that we really want? That's the goal of what I want to achieve here today. So in order to do that, what I propose is to simplify your life. And what I mean by that is not to make it simple, but simply simplify. And simplify that into two different indicators that is key in helping you determine a directional view. And those two indicators are trend analysis and relative strength. Now, these two in itself are not actual indicators. These are more methodologies, if you will. So trend analysis is a simple form of analysis where you're simply predicting the future direction by studying historical patterns. There's lots of different ways to go about doing trend analysis. I think one of the most common ways that most of you are probably familiar with are indicators such as moving averages, and many of you that are familiar with the charts, you may have drawn trend lines or perhaps channels. These are all different ways or methodologies to gain a directional view by analyzing the trend. There are even more sophisticated methods for those of you that are interested in statistics, like linear regression and things like that. However, they all are effectively different methodologies to try to gain the same thing, which is understanding whether something is trending higher, trending lower, or trending sideways. So that's ultimately what trend analysis is supposed to do. And there are pros and cons to each one. We'll dive into some of that through our webinar today. The second form of analysis is what we call relative strength. This is where you compare the asset class, where the asset's performance to the overall market. That gives you an idea as far as whether a stock or an asset is outperforming or underperforming the market. So simple ways to do this, or rather, there's many ways to do this, and a simple way to do that is simply where you compare the asset price to a benchmark of the market, such as the S&P 500. That gives you a sense that if a stock goes up 5% when the market goes up 3%, then it's outperforming the market. Or if the stock goes up 1% when the market's going up 3%, then it's underperforming the market. So it's a really simple measurement to compare the stock versus the overall market. There are more robust methods, such as many ranking different indicators, such as IBD publishes their Ibd Rank, which ranks for a stock from 0 to 100. 100 are the stocks that are outperforming the market by the most amount, and 1 are the stocks that underperform the market by the most amount. And there's various, I would say, methodologies here, IBD, Zacks, stock charts. They all publish similar type ranking based on different tweaks of that type of methodology. So these are the two forms of analysis that we propose that you look at to gain your directional view. However, one of the issues that you get with looking at trend analysis and looking at relative strength is the fact that there's many different ways to do it, almost infinite number of ways to look at trend, and almost infinite number of ways to look at relative strength. So this is really where I get a lot of questions saying, well, what moving average should I use, and how should I use them? Do I buy on a crossover? Do I look at the slope of the moving average? Do I use a 50-day? Do I use a 200-day? And this is where my experience as a market strategist leads me to teach this concept that it really doesn't matter which moving average you use and how you use it. It's about how consistently you use the same moving averages day in and day out. That's more important for a reliable directional view, to gain that objective directional view than trying to figure out which moving average or which trend line, because no moving average is better or worse than another. It really just depends on what time frame you trade with, and of selecting a moving average that corresponds to the time frame that you prefer to trade. So if you're a day trader, you probably should not be using 200-day moving average. If you're a long-term buy and hold investor, you probably shouldn't be using a 10 or 20-day moving average. You should select a moving average according to your time frame. And when it comes to relative strength, again, there's many, many different ways to do it, but I do tend to find that any of the more robust methods, anything where you rank stocks against each other, is really comparable in helping you gain that view on relative strength. So with that in mind, because the key to gaining that directional view is consistency and not necessarily which indicator you look at, that's where OptionsPlay is designed to help you gain that consistency by doing the work for you. So for for trend analysis, we offer what's called the 1 month and 6 month trend analysis. This gives you a simple reading. Instead of having to figure out which moving average to use and how to interpret that moving average, it does that work for you and simply tells you whether the 1 month and 6 month trend is either bullish, bearish, or neutral. So what that means is that it applies the same moving averages day in and day out, and applies the same reading of those moving averages day in and day out, so that you gain that directional view, or more of an objective directional view on any stock that you're looking at. And as far as relative strength, we have our own ranking methodology where we rank all stocks on a score from 1 to 10. 10 are effectively the weakest stocks in the market, so the stocks that are underperforming the market the most, and 10 are the strongest stocks in the market, the stocks that are outperforming the market the most, and 5s are effectively all stocks that are performing on par with the overall market. So that gives you a sense, very clear reading with a consistent methodology day in and day out, so that you don't have to figure out, should I use the 50-day moving average today or the 200-day moving average? We always consistently use the same moving average day in and day out, and we use the same methodology to look at that moving average to determine whether it's bullish, bearish, or neutral, and simply give you an output. So this is really where, on the next slide, I'm going to show you how do you combine these two with each other to truly gain your directional edge. And the reason I say that is because there are limitations to trend analysis, and there's limitations to relative strength. Namely, when you look at trend analysis, you're only comparing a stock against itself. You're only comparing a stock to its own history, which means that you can't compare two stocks. So if two stocks are both bullish, how do you actually know which one's better or which one's worse? Because there's going to be lots of bullish stocks and lots of bearish stocks and lots of neutral stocks. How do you actually pick from that? On the other hand, when it comes to relative strength does allow you to compare stocks against each other so you know which stock is stronger and which stock is weaker. However, what it doesn't tell you is whether if it's getting stronger or weaker. And that's really where the combination between trend analysis and relative strength, when used combined with each other, is what's going to give you that directional edge. So that's what we're going to show you here today. And what I've created is 4 different categories. And these 4 categories is the examples that I'll show you in the next slide. And these 4 categories are fairly easy to remember, in my opinion. You can think of them as the top 2 are what we consider trend following methods. So where effectively you are trading with a trend. And the second 2 are what we call trend reversals, so where a trend is simply reversing. So the trend following, I think, is fairly straightforward. So this is what I consider a strong bullish stock, which is a stock that has strong relative strength, so a stock that's outperforming the overall market, and it's exhibiting bullish trends. So meaning relative strength and trend is matching up. These are bullish candidates for trading. On the other side, for strong bearish stocks, these are stocks with a weak relative strength. So a stock that's effectively underperforming the overall market and it's exhibiting bearish trends. So everything is weak and it's continuing to weaken. These are the bearish candidates that you would look for when you're trading stocks or options. So those 2, I think, are fairly easy to remember and to understand. The next 2 are effectively bullish turnarounds. So this is for those of you that like to pick market bottoms or try to pick market tops. For a bullish turnaround, these are what we call trend reversals. So a stock that has weak relative strength, which means that this stock has really underperformed the overall market. So when the market is up 5%, this stock might only be up 1% or 3%. However, it's exhibiting bullish trends. So what this means is that this stock is starting to turn around. This is a stock that's bottoming and is likely going to start rising. So for those of you that are looking to acquire stocks at a lower price, buy low, sell high. These are the types of candidates that you're looking for to try to buy low. These are stocks that have been beaten up but starting to turn around. Conversely, bearish turnarounds are just the opposite. These are stocks with strong relative strength, so stocks that are outperforming the overall market but starting to show bearish trends. So these are stocks that were outperforming the market, but starting to turn around. They're starting to underperform. That's how we can identify stocks that are starting to turn around. So if you own these stocks, it might be time to start taking profit and start exiting those trades. And for those of you that are a bit more opportunistic, these are perhaps short candidates. So in the next slide, what I want to do is show you how we've built our platform from the ground up to make this process of selecting or understanding whether a stock fits into one of these 4 categories as instantly as possible. And what we're going to start with is actually the watch list. So any of you that have used OptionsPlay, you know that our watch lists are color-coded. It's color-coded for a reason, because it's color-coded so that you can quickly identify which one of these 4 categories a stock is in without having to pull up a chart, without having to know anything about that stock, without having to even know the name of the stock. You can understand whether a stock is bullish, bearish, or starting to turn around, either bullish or bearish. So what I have here is 8 examples, and I'll walk you through each one as to how easy it is to pick which stocks are in which category. So in the first 2, I have Take-Two Interactive and Nordstrom. As you can see, I have my watch list sorted by the score. This is the score, the technical score that we're referring to. So scores of 1 are the weakest stocks in the market, and scores of 10 are the strongest stocks in the market. So once I sort my watch list by the score, I already know which stocks are outperforming the market and which stocks are underperforming the market, just by looking at the score. Then I look at the color. The color tells me the trend. So as you can see, for Take-Two and Nordstrom, both the scores are 1 and 2. So these are some of the weakest stocks in the market. And as you can see, I have red across the board, which is telling me that the trends are bearish. Both the 1-month and 6-month trends are bearish. So this is one of what I would consider a strong bearish category. So a stock that's bearish and it's weak, so it's likely to continue weakening. Conversely, on the other end of the spectrum, American Airlines and Merck's, score of 7 and score of 9, and as you can see, it's green across the board. So these are 2 that I would consider strong bullish stocks, stocks that are outperforming the markets and they have bullish trends. So if I'm looking for some bullish candidates, these are the types of stocks that I would be looking for. Conversely, the two that I think are reversal stocks that are starting to turn around, Rider Systems and Electronic Arts. These are stocks with a score of 4, so relatively weak stocks that are underperforming the market. But as you can see, they've got green trend lines, so green trends, which is telling me this is likely a bullish turnaround, telling me that this is a stock that is weak but starting to turn around. And lastly, Newmont Mining and CME Group, as you can see, scores of 7 and 8, so very strong stocks that are outperforming the market. But as you can see, the trend is either bearish or bearish neutral. So clearly no longer bullish, even though they have strong relative strength. So this is telling me that these are candidates for potentially a bearish turnaround. So if I own these stocks, it certainly might be time to exit those trades. And if I'm more opportunistic, these might be opportunities to short. So what I want to do is that I want to jump over to OptionsPlay, and I want to show you some of these actual charts to show you what they look like. But what I wanted to do is show you how easy it is to set up a watch list in OptionsPlay and be able to, without having to do any additional work, without having to pull up a chart or do any research on a stock, within a few seconds know whether a stock falls into one of these 4 categories, so you can organize your watch list every single day very, very quickly and gain a knowledge as to where you want to start looking. That's really the goal of our watch list. Now, before I jump right into OptionsPlay, I do want to show you guys a framework for how to find high probability setups, because this is really what everyone's after, is how do you find bullish and bearish candidates for trading either the stock or the option. So this is really where we take a top-down approach. Many of you ask us, how do we pick our daily play ideas when we send them out? This is really what we look for in our daily play categories. So when we're looking for bullish ideas, we're really looking for quite a few different things to line up. We call it the top-down approach, where we look at the overall market, we look at whether we feel the markets are overbought or oversold, on a short-term scale, because we want the market to work in our favor. Then we look at individual sectors to see which sectors are strong, which sectors are weak. We have a watch list just for sectors, so you can sort our watch list on sectors and see exactly which sectors are strong, which sectors are weak. And then once we've identified a sector that's strong or weak, then we look at the individual stocks within that sector to try to find either the strongest or weakest stocks within that sector. And that's how we go about finding our trade ideas. So when we're looking for bullish opportunities, we really want markets that are relatively oversold so that they have a strong chance of moving higher. We're looking for a strong bullish sector in a strong bullish market, and then we try to find a strong bullish stock within that strong sector that also generates some kind of buy signal. And when I talk about buy signal, this could be a variety of buy signals. We use technical analysis to generate our buy signals, but from my perspective, it doesn't matter how you go about generating your buy signals, whether it's fundamental, whether it's statistical, whether it's technical. As long as you have the other 3 lined up, you are putting yourself in a higher probability category for that candidate. And vice versa, on the bearish side, same thing. I'm looking for more bearish markets, so perhaps markets that are a bit overbought. I'm looking for weak sectors in this particular case, and I'm specifically looking for weak stocks within that weak sector. Those are the candidates that give me the highest probability of that stock moving lower. And then we always try to, if possible, find some kind of sell signal. Like I said, we use technical indicators for that, but you can use all different forms of analysis to gain that actual signal itself. So this is the approach that we use, and these are some of the things that I'm going to highlight for you in the actual trading examples that we'll show you here within OptionsPlay. So right now what I'll do is I'm going to jump over to OptionsPlay. I want to show you guys how we built this platform from the ground up to make this process of finding a directional view on any stock instant or as quickly as possible, so that even if you don't know, for those of you that answer that you don't really know how to go about finding a reliable reading on, or a reliable directional reading on a stock, I want you to be able to leave this webinar with a feeling that you're confident in being able to do the same things that we're going to show you here today. So for those of you that are brand new to OptionsPlay, this is the tool that you have access to. You can sign up for a free trial at OptionsPlay.com. The platform itself is divided into 3 sections. We have trade ideas, watch list, and portfolio on the left-hand side. In the middle panel, we have our security analysis panel. On the right-hand side, we have trading and income. So these three panels are what we consider the what, the why, and the how of options trading, because every single day you want to know what should I look at. So Trade Ideas and Watchlist provide you with ideas to get into a trade, and Portfolio helps us track our daily play ideas that we send out every single day. The middle panel is our security analysis panel. That's where the 1 month trend, 1 month and 6 month trend that we spoke about resides, as well as the technical score. And then everything that you need in terms of understanding how long the stock's been in that trend for, the next earnings date, dividend date, and price action. This is all designed to help you gain that directional edge. And then lastly, once you have that directional view on an underlying stock, how do you actually leverage that into an actual trade? And that's really where the trading tab comes into play. You can select either bullish ideas to see bullish strategies, or bearish to select bearish strategies, and quickly leverage your directional view into an actual trade using OptionsPlay. So today what we're going to do is we're going to explore how to utilize the left two panels, the Trade Ideas and Watchlist panel and the middle panel, to gain that directional view. And then I'll take a little bit of time to show you guys how I would leverage that into an options trade. So when you first click on the watch list, you'll see that we always start you off on the sector spiders. This is effectively a list of all the sector ETFs. Like I said, I like to sort this by score, because when I start off my day, I want to know what the sectors are doing. That helps me understand which sectors are moving, which sectors are strong, which sectors are weak, and allows me to quickly frame looking at specific sectors, because I really want to look at either the weakest sectors or the strongest sectors. That's where I'm going to likely get some higher probability moves. So it's really important for me to know that energy and materials are two relatively weak sectors, while industrials, real estate, staples, and utilities are the 3 or 4 strongest sectors. So if I'm looking for opportunities, I'm likely going to look in these few sectors throughout the day. And then what we want to do is we want to show you this watch list that I created. These are the stocks that I showed you before: Take-Two, Nordstrom, EA, Ryder Systems, and show you how you can utilize our tool to quickly gain that directional view. So I already showed you how the watch list does it. So now what I'll do is I'll just go through a few examples before I open this up for the lightning round, and show you guys how easy it is to utilize our tool to gain that directional view. So before I click on Take-Two, I know that it's got a score of 1. I see red across the board, so it's telling me this is a relatively weak stock that's continuing to weaken. So as you can see, if I pull up a chart of Take-Two, you'll see that this stock has really started to underperform back in, I would say, November of last year. You know, as you can see, what we offer not only is the current 1 month and 6 month trend and the technical score currently, we also show you how it's changed over time. So as you can see back here in September, all the trends were bullish until around October 8th or so is when things started to deteriorate. So imagine that you had the signal back then in October 8th, that Take-Two was starting to turn around, and you could either use this as a short opportunity, or perhaps if you own the stock, that might be a signal to get out. And subsequently, as you can see, the stock really deteriorated until fairly recently. It started to come back to life, but continued to weaken. And this is really when trend indicators started to turn weak again here in early February. So this really tells me that this is a stock that would probably be on a short list candidate. So a stock that's likely going to be used to perhaps short the stock. And this is really where options come into play, because if you're just a stock trader, shorting the stock may not always be a good trade. Maybe the stock is hard to borrow. Maybe the margin interest on that is really high. Maybe you don't even have the ability to short a stock in your account. But however, you can always buy a put or buy a put spread. That really allows you to take advantage of, if Take-Two really tumbles and continues to go lower, maybe it goes down to $80 or even lower, how do you actually take advantage of that? This allows you to model out any given outlook on Take-Two and see that if you had shorted the stock, how much money do you make? If you bought the put or the put spread, how much money do you make? And then vice versa. What if you're wrong? What if Take-Two really takes off? You know, we've seen this in electronic arts, which really tumbled on earnings a couple of weeks ago. It was down 12-13% after earnings, and it shot right back up a week later. It's now up, I think, 20 or 30%, which is quite a run for Electronic Arts. So, there's always the chance that this stock maybe rallies back up to 110. How much money are you risking? That's really a key indication of options, is understanding not only how much money do you make if you're right, but more importantly, how much money do you lose if you're wrong. If you shorted that stock, you'd lose $1,800. And that doesn't even consider the fact that you have to put up a substantial amount of capital to short a stock. But you're risking $1,800 if the stock goes higher, versus if you bought the put, you're only risking $510. And if you bought the spread, you're only risking $420. So you're only risking a fraction amount of money versus shorting that stock or buying a put. Yet, also, if you're right on this trade, if your analysis is correct and the stock goes down to $80, you actually make the highest return. So not only do you have the least amount of risk with the strategy here on the right, you also have the highest return. And that's why this strategy has the highest options play score. A lot of people ask us, what's the options play score? It's looking at both the potential risks and the potential reward of your strategy and showing you apples to apples, the three strategies you're looking at, which one gives you the best risk to reward. And it gives you that green check mark telling you that this was the highest risk to reward strategy, or the strategy with the best risk to reward out of the three that you're looking at right there. And this really makes the selection process of, number one, figuring out your directional view on a stock as easy as possible, but also at the same time help you leverage that into an actual trade. Because keep in mind, we don't make money from our analysis, we only make money from our trade. So it's really important that we analyze our trades and make sure that we're deploying our capital efficiently when we're making our trades. So let's just jump over to a few more examples here. I want to look at Nordstrom, same thing, relatively weak stock, score of 2, 1 month and 6 month trends are bearish, and it's been bearish for quite some time. It's been bearish pretty much since November 14th. So before this huge drop here, our trends turned bearish on November 14th, and as you can see, the stock has continued to weaken since then. And is this a bottom here around 44? Perhaps, but if it does break that 44 support level and the trends remain bearish, these are really strong bearish signals for this particular stock. So this is really how I would utilize this type of strategy. Conversely, if I'm looking at American Airlines, the picture is quite different. American Airlines, score of 7, telling me this is a relatively strong stock. This stock, while it did sell off heavily in December, just like all stocks, it has rallied up quite a bit since then, which is why it's got a score of 7. 1 month and 6 month trends are bullish. As you can see, this stock just recently turned bullish not too long ago. It actually turned bullish right here on January 28th. And then is kind of moving sideways, and 1 month and 6 month trend turned bullish just yesterday. So these are indications that this stock may recover, perhaps in my opinion, at least back up to maybe that 41 level. So you can plug these target prices into your trading strategy here and see, well, if the stock goes back up to 41, if I bought the stock, I make a 14% return. That's a nice return for a stock. Buying a call option, 177% return, or buying a spread, 202% return. These are the types of returns that you're looking for when you have that strong directional view, because you can't make those types of returns trading other markets. And keep in mind that what if American Airlines pulls back to that $30 low? What happens if trade deals don't really go well and we have another major sell-off, or Fed raises interest rates? These are all risks that we have to account for. Here, as you can see, if the stock goes back to $30, buying the stock, I'm risking $605, call option $180, call spread $149. So again, highest options play score goes to the strategy with the best reward with the least amount of risk. That's how we quantify our options play score. And then the next two examples, I want to look at CME. It was actually pretty hard to find stocks that are strong but starting to turn around, because we've been in such a strong rally in the markets. It was actually quite difficult to find one. But CME, here's a stock that's strong stock, technical score of 8. But the 1 month and 6 month trend, as you can see, is bearish and neutral. And it actually turned around here just like most other stocks in mid-December. The 1 month and 6 month trend turned bearish. And as you can see, pretty much at that point, around that $185 level, if you were long this stock, that's probably an indication of time. It's time to get out or time to take profits. And for short traders, you basically want to sell these rallies. And effectively, that's what we're seeing right now is one of these small rallies. And I would target minimum 175 to the downside if you're bearish on CME. But if this thing really breaks that support level, I really think you can get a big move down to maybe 160 or at least 170 at the minimum, but likely more extended targets down to even 160. So this is really where you can find opportunities for big, fast moves in one direction or another without even having to look at a chart. I know that Newmont Mining is one of these candidates because of the fact that it's got a score of 7 and the fact that it's red and yellow. So same thing, Newmont Mining. 1 month and 6 months trends are neutral and mildly bearish, but it's got a technical score of 7. This is a stock that didn't sell off as much throughout December, or at least rallied quite hard after that sell-off, but it's starting to turn back around again. And as you can see, this trend just started a couple of days ago. So this is perhaps the beginning of a bearish trend on this particular stock. As you can see, I think that you can easily target maybe that $31 level as a target price, which you can use to type in and see what your expected returns of each strategy is. And keep in mind that sometimes you put in a target price and the returns don't look very good. Maybe you only feel that this stock's only going down to $32. Maybe you're not as aggressive. So as you can see, if I plug this in, if I think that this stock will go down to $32, none of these returns look particularly attractive. But that's really the power of OptionsPlay, is that it allows you to find opportunities, plug in a target price, and within a few seconds know, is this something I want to spend more time researching and analyzing, or do I just want to move on to that next stock? We want you to be able to go through stocks as quickly as possible and make a decision within a few seconds and not have to spend minutes, 10, 15 minutes analyzing a trade, then analyzing a strategy before you can decide, is this something I want to do? I know time is not on our side when it comes to trading, so we want to make this process of selecting a stock and selecting a strategy down to just a few seconds for you, and it provides you with summary data so that you can immediately make a decision as quickly as possible. Lastly, I want to show you Rider Systems. This is a stock that's let's do Rider Systems. This is a stock is relatively weak, technical score of 4. 1 month and 6 month trend is bullish and neutral. As you can see, this really started to turn around in early January. So this stock has sold off substantially since September of last year. This stock made almost a 50% decline from its $80 highs all the way down to about 45. So almost a 50% decline, which is why it's one of the weakest stocks in the market. And for those of you that are keen technical analysts, you'll likely see that this looks like an inverted head and shoulders pattern, and it just started to break above that 57, 58 neckline, which really gives it a lot of opportunity or a lot of room to the upside up to about $70. And it really I would say, still fairly early in this rally, and I think you have quite a bit of room up to that 70 level. So again, you can use that information, plug it into our P&L simulator, and say that, well, if I think Rider is going to go up to $70, if I bought the stock, it'll cost me $6,400, but I'm going to make an 8% return. Or I can buy this call option, which will give me 192% return versus a spread, 206% return. And conversely, if this stock goes back down below that inverted head and shoulders, maybe back down to $52, here I'm risking $1,000. Here I'm risking $250. Here I'm risking $245. So really allowing you to understand both your risks and rewards, which is really, really important, instantly using this tool so that you can type in any stock and quickly see a directional view and then instantly leverage that into an options tool, an options play. So with that, I hope that this illustrates to you guys how quickly you can utilize our tool to gain a directional view and leverage that into a trade. But to really show you, what I'll do is I'll open this up now for the lightning round. Please type in any symbols that you want me to analyze, and I'll try to do as many as possible. And I only have 6 minutes left, but I'll try to go through as many symbols as possible just to show you how easy it is to utilize this tool. So type in the symbols that you want me to take a look at, and we'll take a look at them one by one. We'll go through as many as I can. So TJX, relatively weak stock. very weak stock actually, but as you can see, the trends have started to turn around. It started to turn around back here in early or late January, and as you can see, it's starting to break out to new highs. I think you have quite a bit of opportunity for TJX to move higher, well into the 50s. However, as you can see, the options don't look particularly attractive, meaning they're actually quite expensive. So, I would be careful as to how you go about trading this. You can certainly trade the stock if you're a long-term investor in this particular, or if you're interested in investing in this stock. And just so you know, for those of you that type symbols into the Q&A window, if you don't mind, type them into the chat window. That'll be really helpful for me. AMAT, Applied Materials, score of 6, so relatively neutral stock. 1 month and 6 month trend is bullish. It's been bullish for a few weeks here, since January 25th, and it's starting to move higher fairly nicely. So from my perspective, we have this resistance level around 44, 45. That would be my conservative target here. So let's say I think it's going to go up to 45. Buying the stock is 11% return, 96% return on the call, 113% return on the call spread. That's really where I'd probably be looking at, is being able to buy, compare and buying that stock. I'm doing it at a fraction of the cost for only $234. I'm going to make 113% return if I'm right, and vice versa. If I'm wrong, I'm going to risk a fraction of what I'm risking on the long stock. ACB. Aurora Cannabis. This stock we actually don't rank because this is one of the smaller cap names. It simply doesn't have quite enough price history for us to rank. So unfortunately, I don't have a rank for you. Looking at this chart, this doesn't look like a particularly strong chart. As you can see, this has really underperformed the market since October. But it is starting to turn around. As you can see, it turned around just like many other stocks here in mid-January, starting to form higher highs and higher lows. So you do certainly have plenty of upside to that. I will say a lot of these weed stocks, the options are very, very expensive. So in this particular case, it doesn't look horrible. But as you can see, the OptionsPlay score of 84 is average, meaning the options are still somewhat expensive. But so this is really a stock that you might want to play some longer term upside for on ACB. Next, GE. This stock has really kind of had quite a turnaround. So this stock really turned around back here in early January. If you were able to catch this in early January, you would have had a pretty nice return up until now. And this trend is really continued. So the 1 month and 6 month trend just turned bullish yesterday. So here is, I think, an opportunity to get into this stock. Whether you're a stock investor and you want to buy the stock, or you want to be a bit more tactical and buy an option. $1,000 to buy 100 shares, $59 to buy the call, $48 to buy the spread. So 5% of the underlying, you can buy this call spread. And if the stock goes back up to maybe $12, which I think is probably where you have a decent target, call option gives you a better return, 240% return if the stock goes up to $12. As you can see, this stock really rallied $1.50 in the last couple of weeks. So another $1.50 to the upside, I don't think is crazy. SPY. So we don't, SPY is the market, so we don't have a technical score on SPY. You just have the 1 month and 6 month trend. This stock, the market has really rallied significantly from this low. So it's difficult to go long, but as you can see, there's still some upside to higher. So I think at least 280, 284, where this trend continues, are conservative targets. But as you can see, if this goes up to 280, the returns probably aren't very attractive. So in my opinion, you don't have a lot of upside here. Yet I wouldn't go short SPY at the moment. So this is kind of more the middle ground, if you will, for SPY. Next, AT&T, weak stock, relative score of 4. 1 month and 6 month trends are bearish. It's been bearish for a couple of weeks here in February. So I certainly have more of a bearish directional view. However, this stock has really just been very sideways. So I don't have a particularly strong bearish view on this particular stock because of the fact that it's been quite sideways. But gun to my head, I would certainly be pushing short opportunities on the stock rather than long. CGC, Aurora Canopy Growth rather. So as you can see, score of 10, very strong stock. 1 month and 6 month trend turned bullish here back in January 9th. You've certainly already had quite a rally, but a bit of a pullback. These pullbacks sometimes, many times, are good opportunities to continue this move higher. So I really am quite bullish on the stock. I think you can make a run back up to that 57, 59 high. So if, let's say you do get that 57 high, 25% return on the stock, 113% return on the call, 168% return on the call spread. I think this is an interesting opportunity to look at. Next, Boeing. This stock maybe has some good news on the fact that Airbus is really not doing very well. Broke out above to 52-week highs just last week. 1 month and 6 month trend is bullish. 1 month, a technical score of 10, one of the strongest stocks in the market. These are strong bullish opportunities. For Boeing, there's no previous high for us to refer to, so I don't really have a target price for you. This is really where you might want to rely on other forms of analysis, maybe fundamental analysis, to get a sense for target price. But wherever you think your targets are, plug this in. But I do think Boeing is a strong bullish candidate. Next, Schwab. Very neutral technical score, very neutral trend as well. So this stock is really kind of just in that middle ground. Unfortunately, this is maybe a stock that you might want to sell some credit spreads on. There's really no strong directional view on this particular stock. Next, Celgene. Very strong, neutral stock, but 1 month and 6 month trend is bullish. Turned bullish very early here in early January. I'm guessing that was in earnings. I'm actually not aware of this particular stock. But as you can see, options here are very, very expensive. So I probably, or maybe there's just not enough strikes. 95 is the highest strike. So that's why you have this crazy looking chart here, is because there's no higher strike. So unfortunately here, even if you bought the call option, as you can see, OptionsPlay score of 43, extremely low, meaning very poor risk to reward. That means the options are very, very expensive. So you're bullish this stock, I'd say buy the stock, stay away from the option. Bank of America. This is a stock that we are in. So very neutral stock, but as you can see, 1 month and 6 month trend turned bullish back here in mid-January. Recently pulled back a little. These are the types of pullbacks that we're looking for in terms of to get into a stock. And this is really what we're hoping to see is a rally back up to that 31, 32 level on Bank of America. This is a stock that's relatively neutral, but started to turn around or started to turn higher. And we're looking to, on that pullback, to get into this stock to move higher. Schwab, we've already done. Celgene, we've already done. Oh, ACB, I think we did that already. Netflix. Strong stocks, technical score of 7. 1 month and 6 month trend is bullish. As you can see, this stock turned bullish back here in January 10th, and is really hasn't been able to move higher above 355 or so, but continues to make higher lows. So this is really where I do think that you can get a push back up to about 385. That would be a conservative target for me to the upside. As you can see, if it does make it up to 385, you do get a 71% return on the call spread, which is, I would say, average. Certainly not what I would consider very attractive, unless the stock really takes off. But, you know, I'm not, as bullish as I am, you know, I usually use these support and resistance levels as my targets. MU is one of these stocks that really turned around. This stock was really looking pretty bad at the end of last year and made quite a turnaround here. On January 24th, that's when trends no longer turned bullish, and at the same time it broke above this $36 resistance level. And those are the types of signals that you're looking for when things turn bullish and you get some kind of signal, whether it's technical, whether it's price action. Any of these types of signals are opportunities. And as you can see, it really made a quick rally from 35 all the way up to 41, pulled back. These pullbacks are really the types of buying opportunities that you're looking for, and it moved right back up to that 40, 42 level. So while I do have a bullish view on this particular stock, I do find that you probably short term may not want to get into the stock after it's rallied so much in the last couple of weeks. So I would hold off and maybe wait for a pullback on this particular stock before getting in. AA, Alcoa, very weak stock, but as you can see, 1 month and 6 month trends are neutral. This is telling me this is the very start of a bottoming formation. This looks kind of like a bit of like an inverted head and shoulders or double bottom here. As you can see, there's a major resistance level at 30 bucks. So I would wait for this to clear above 30 before you get bullish or get into this type of stock. So again, you want to look for these bullish opportunities, but you, if possible, try to get some kind of signal. So break above resistance level or pull back to a support level. Those are the types of signals that you want to give you those high probability setups. I'll do one more. VFF. Sorry. Let's see, VFF. I've never heard of this stock. I don't know what that is. That's actually not a symbol, so we'll move on to the next one. FOG. I'm also not familiar with this particular. Sorry, I don't know what all these symbols are. I don't know if these are American symbols or if this is someone. Toll Brothers. Very strong stock. Technical score of 8. 1 month and 6 month trend is bullish. As you can see, this stock is bullish since January 4th, right when it broke above that $34 resistance level. So that was, in my opinion, a signal to go long. As you can see, it rallied up to about 37, pulled back to that 34 level. These are the pullbacks that I'm talking about. These are the pullbacks that you want to take a look at, or opportunities as a signal to get in. As you can see, if you were able to enter back when it pulled back to that 34 level, you got a very quick, fast move back up to 37, 38. But that's really where you have another resistance level. So while I'm bullish on this particular stock, and this is actually a stock that we took on this type of pullback, we went long Toll Brothers when it hit around that 34 level. We got out when it did rally up to that 37 level. So I do think there's limited upside at this point, that you might be a little late, considering this stock went bullish back in January 4th. Now we're February 14th. It's a month and a half late, in my opinion. But if it breaks 38 again, then I do think you can get another push up to 41. So I thank you, everyone, for submitting your symbols. I really would like to do more, but we're running out of time here. Thank you so much for taking your time out this afternoon and viewing our webinar and letting us show you how to actually utilize this platform the way we built it. We built it to save ourselves time as traders, and we're really hoping that this will help you save yourself time as well, both in helping you gain that directional view on the underlying stock, but also at the same time helping you leverage that into a directional trade as quickly as possible. So with that, I want to thank everyone for taking the time out this afternoon. I'll open this up for Q&A. I have a few minutes for questions and answers, so if you have any questions, please type them into the chat window, and I'll answer as many questions as I have time for. And I'm sorry I couldn't get to all the different symbols. You guys really submitted a lot of symbols. I tried to get to as many as possible. Craig's asking, what does the OptionsPlay logo mean when it's on a trade, the SPY call spread we just saw? So the OptionsPlay logo on an actual trade is a very good question. The question is, why does this one get an OptionsPlay symbol and not a check mark? Great question. So when you hit the trade button, we have what's called a strategy checklist. So when everything is checked off as green on the strategy checklist, that's when you get an OptionsPlay score. So that's really what it is. Thank you for asking that question. That's a great question. What is the green tick mark on the right panel? So this is just referring to all the other ones that we talked about. What is that green check mark? The green check mark just refers to which strategy out of the three gives you the best risk to reward ratio. I know someone asked for Coca-Cola. Very strong stock, score of 9. 1 month and 6 month trend is bullish. So this is certainly a bullish opportunity. This would easily make another run at the 52-week high. Does it break above that 2-week high and higher? I don't know, but I would target that 52-week high at a minimum. I do think that this is a few days late because things kind of turned bullish here on February 1st when it broke above that 48 level. That was really the opportunity to get in. It's already made that move. So if you're bullish on Coca-Cola, I would see if you can get a pullback towards that 48 before you go long. Rogers asked, do you trade options through earnings? or sorry, I'm sorry, I skipped a few questions. Is this webinar recorded? Yes, this webinar is recorded, and you will get the slides afterwards. Irina, thank you so much. I really appreciate this. Michael's saying, do you trade options through earnings? We do. There's plenty of trades that we place that are through earnings. It's up to you as to whether you're comfortable with that type of binary risk, because effectively is a very binary risk. If the earnings go in your favor, you make a lot of money instantly. If the earnings go against you, you could lose everything instantly. So the question is whether or not that's a risk that you're willing to take. But we certainly, however, if you do take that risk, I highly recommend that you take strategies like spreads or calls that allow you to have limited risk, so that when things don't go in your favor, you limit the amount of money that you will risk on that particular trade. Roger's saying, how does OptionsPlay know or factor in which expiration date to select? So we will always select an expiration date that's 45 days out. And the reason we do that is because that's where most option liquidity is. It's about 1 to 2 months out. We're not saying that that's the best trade to make, but that's really where most liquidity is, and that's where most people trade, is options that are 1 to 2 months out. So that's where we start you off. You can always modify it, so you can click on modify. You can adjust it by making it go further out to April, or click on the left arrow to make it shorter dated. You can do all of that modification here within OptionsPlay. Ida's asking, the Coca-Cola recommendations from Options Action. This is a trade that simply did not work out. Oh, actually, that's really what happened. Coca-Cola declined back to like 46 bucks or something? 45 bucks. Yeah, so Coca-Cola is down here around 45 bucks. So I forgot about that. Sorry. So Coca-Cola, unfortunately, is no longer bullish. This will update once we have the end-of-day pricing on Coca-Cola. Coca-Cola is one of these trades where effectively the option you bought is not worth very much. And as far as adjustments go, I don't know that there's really much adjustments to make, because we made a bet that Coca-Cola is going to go higher. It didn't go higher, and we accept our max loss, which is what we were willing to take when we got into that trade. So unfortunately, in this particular case, I don't know that there's much adjustments to make. As far as the trade itself, I think the Coca-Cola trade, if I'm not mistaken, still has a couple of months left, if not 3 months left. So we've seen quite a few turnarounds this quarter on certain stocks, so I wouldn't necessarily know. So you might want to, at this point, hold on to it. The stock may come back, and you might be able to get a little bit more for your option, but at this point, I don't know that there's a lot of adjustments to make there. Is there a way to find symbols that are changing trend direction on 1 month and 6 month trend? That's a great question. That's something that we're looking to add to our scanners in terms of our trade ideas. However, I will say that if you just look for trend change in itself, you're going to get a lot of signals every single day. You're probably going to look at hundreds, if not thousands. And I don't know that that's something that you necessarily want to go through, because every time a stock crosses a moving average, it technically changes trend. Usually that in itself is not quite enough to go out and buy and sell. So it's something that we've looked at, but we tend to find that there's simply too many stocks that change trend in a given day. Again, is this recorded? Yes, the webinar is recorded, so you'll be able to get the recording and the slides afterwards. Tom, thank you very much. I hope you got something out of this. Yes, I forgot Coca-Cola did drop on earnings. We do expect that to update in the charts once we get our end of day pricing. We get that intraday. However, at the end of the day, the intraday pricing goes away, and we wait for the end of day official prices to update our charts. Surprised you didn't cover trade checkoff. So that is something I did get a chance to cover. What are the default values for price and date on the trade panel? The default pricing is always going to be the 1 standard deviation move and the expiration date. That will always be the default price for the P&L simulator. What percentage of in-the-money trades must be right on to make money in the long term? I'm not sure what that means, Sharif, if you don't mind clarifying that. Not live charts. The charts are live during the day, just that after the market closes, we wait for the official prices before we update the next day's chart. Would you buy a put on Coca-Cola? So my thoughts on Coca-Cola is that this stock is down, what, 12%? The stock's down 12%. So that depends on whether you think the stock's going to continue going lower. If you think it's going to continue going lower, then you should buy a put. In my opinion, I think 45 is a pretty low point. If anything, I know this sounds crazy, but maybe I'd buy some calls. I would buy maybe some $46, $47 calls, out of the money calls that are relatively cheap, and see if you get a bounce. I mean, Coca-Cola, well, that's more of a, in my opinion, I don't get into trades that are down 12% in one day. I think I'd wait a few days, see where the market goes before I consider whether I want to go long or short that particular stock. But on a day that's massively down, I usually wouldn't buy a put immediately. Yeah, so Coca-Cola expiration date is March 29th, which gives us a month and a half, rather. So in my opinion, there's really not much to do here. This is a trade that just simply did not work out. Any other questions? Maybe I missed some on the Q&A side. What is the relationship for OptionsPlay for the CDN index? I'm not sure what the CDN index is, Robert. If you don't mind clarifying. Raymond, thank you so much. I really appreciate the participation every single week and the dedication. And for everyone, happy Valentine's Day for what that's worth. I know hopefully maybe you guys can spend some time with your loved ones after work or after this webinar. I hope everyone has really found this webinar useful. This is really designed to help you guys better understand how to utilize this platform and help you save time. We don't have a lot of time. Yet we all want to get to the same thing as quickly as possible. This is really designed from the ground up to save time, because as traders, we didn't have enough time. We wanted to make things faster and quicker, and this is what we built, and this is what we wanted to show you. Could you present a video on what to do if a vertical doesn't work out? So here's my philosophy on that. If something doesn't work out, you should cut your losses and move on. And some people will say, well, should I enter another spread to try to make my money back? And the answer is, if you weren't already in a losing trade, would you get into a brand new trade? If the answer is no, then you should simply cut your losses and move on. If the answer is yes, then you might want to consider adjusting your trade and making a new trade to try to make your money back. But I tend to find that when you ask yourself, would I be making another trade if I wasn't already in a losing trade? 9 out of 10 times the answer to that question is no. So that is my philosophy on when a trade doesn't work out, you should just consider cutting your losses and moving on. The whole point of options trading is to have defined risk so that I'm comfortable with, if it doesn't work out, that I lose my money. I'm not blowing up my entire account because I've limited the amount of risk. And I accept that I can't be right every single time. Charles, Bob, thank you so much. I really appreciate it. Michael, same thing. Thank you so much. Any other questions? How many trades can you be wrong on and still make money? That completely depends on the trades that you make. So it depends on whether you make risk-reward trades that are in your favor or against you. That's where the beauty of options is. It's completely up to you. Do you want to trade debit spreads where you're risking less than what you can potentially make, or are you trading credit spreads where you're risking more than what you can make? If you're trading debit spreads, you can be wrong 60% of the time and still make money in the long run. That's the type of trading that I prefer to make, is trades where I'm risking far less than what I can potentially make, so that if I'm right, even if I'm wrong 50% of the time, I'm still making money, because the 50% of the time that I am right, I make more money than I'm risking. So that's completely up to you as to the type of trades that you structure. Simon, Thank you so much. I really appreciate it. Thank you, everyone. So again, thank you so much for taking the time out this afternoon. I really hope that you guys have found this useful. I will send out the recording in about 30 minutes. So I hope everyone has a great afternoon. Everyone has a great Valentine's Day, and I will see you guys next week. Have a great evening.